morning, everybody. Welcome to Mosh Pit Live. I am Mark Sebastian, your only option. I'm joined by Alicia Leslie, the queen of the candlesticks, the Duchess of Doge.
Good
Good morning,
morning.
Alicia.
Good morning. How are you today?
I'm doing good. It's my kid's birthday today.
Oh,
Mark the
Mark or
second.
Valentino?
Mark. He's 14 today.
Holy
I
cow.
know. I'm feeling old. Um, but things that are not old are the PPI news that just hit. I have not seen the headline yet, but what I will tell you is that it was definitely something they liked because futures popped off of that news. Oh, here we go.
I see
So
that.
PPI down 0.1% month over month, expected up 0.1. Core 0 month over month was expected to be 0.2. Year over year, up 1 versus an expected 1.3. Core 1.8 versus an expected 2. So across the board, they like the PPI number. That was after kind of an abysmal CPI number. But the PPI number came in relatively positive. And futures are rewarding the market where prior to the announcement, we were trading back at 4,800, down about $15.
Right.
We've now gotten to
Change.
almost back to even. Yeah, almost back to even. So, that's what's happening. Now we're gonna hit on bank earnings here in a little bit. We're gonna be talking about Bitcoin. We're gonna talk about international events and how they might affect markets. We're gonna hit on our best trades for the day. Andrew's gonna have his trading vehicle today. Don't worry. I'm gonna look at some order flow in a REIT. But to start the show, as we always do, let's hit it with Leisha on the charts. And Leisha, let's start with that just ridiculous move in the S&P 500 yesterday. It
Yes.
was a
We
spot.
need to,
I mean, it was sick.
let's look at that real quick. Intraday. Here's SPY intraday, right? We gapped up. And as I said yesterday, to me, this looked like some dealers needed to get out of their longs on this opening. And then we had a shooting star signaling the change in trend, and we sold off. We sold off really well. Then we consolidated up until that bond auction. So this is SPY action. Here's the bond auction right there at 12:30, and look what the bonds did. The 30-year, right there, 12:30. Nice auction, right? 30-year rallied. The 7 to 10-year rallied. All at the same time as, well, the market, I believe, followed the bond auction, and that's where we kind of waited. And then sure enough, we just marched higher. So I think bonds are still key here. And obviously, right, it goes along with the CPI, the inflation readings, and what is the Fed going to do in March?
Yeah,
Are they going to cut? To me, it just seems unbelievable that they would cut as soon as March.
I'm not sure I buy the March cut, but the
only
demand for bonds kind of points to that, right? Get in while the getting's good.
right.
There was heavy foreign demand in the bond market. That's what drove the prices higher. Could be some international risk associated with that bond auction as well, but it was a heck of a rally on the bond market, and it just goes to show you're right, Leisha. The bond market is still the dog, and the stock market is still the tail. And folks, if you're not watching the bond market, you are not watching the market. Bonds are the market. They're about 10x the size of the stock market. Don't ever forget that, folks. Maybe
Correct.
more than that now with how much U.S. Treasuries are floating about. But pretty crazy. So, did you see similar action in the Qs, or were they a little different, or was it what did you see in the triple Q?
Same idea, I believe. I haven't looked at it. Yeah, same idea.
Okay.
Same idea right there. 12:30, March straight high. Yeah, same move. Same move.
Yep.
Now, I know I've been saying what I thought was going to happen I thought the first quarter or the first month, maybe just January, Feb, we'd wallow a little bit and down a bit. And then, just going into an election year, historically, we trade higher on election year. I think we talked about that.
Yeah.
I just heard the other day that 90% of the Fed, officers, officials, governors, whatever their titles are, they're all Democrats.
That's interesting.
Not that you're going to say everyone's partisan, but I don't know.
I don't know that party politics have a huge influence on the Federal Reserve, but it is interesting to note. I believe Powell is a registered Republican.
Powell himself is?
Yeah, he was nominated by Donald Trump. That was where he got his start.
Yeah, that's true.
But what I will say is that Fed actions and pressure from the U.S. Treasury can definitely affect markets for sure.
That's what we're seeing. Well, the market hinges, it just hangs on every last word that he says.
Oh, I know.
And
It's
as long as we
unbelievable.
have some kind of interest rate, I don't see that ever changing anytime
All right.
soon, at least.
Now, I got to tell you, I'm a little flummoxed by the Russell 2000.
Let's look at that.
I keep expecting it to pop, and it keeps dying by the vine.
We will look at that. So
what's going on with the Russell 2000?
Well, I haven't been able to finish my first bonds and SPY and Qs relationship. So bonds are holding a support level, but they're consolidating. And usually a consolidation will be a pause before continuing in the same level. There's the TLT, the 10-year. So I'm getting mixed signals overall. I'm getting mixed signals. The 10 years kind of trying to bounce here. I have support. So if the market's going to follow bonds, they're giving a mixed signal, as is the SPY and the Qs. I have yesterday's action. Now we're double topping here, right? Yesterday's action in SPY and Q are a hanging man is the candle yesterday that was created, and that signals a change in trend at the top of this uptrend, that there's a possible pullback. Now, if SPY continues above 77.5, we'll be trading up to 79.30. That's what I have in SPY. Resistance. Qs, same idea, hanging man, possible change in trend. I do have support here in the Qs, 408. Which they managed to just close just above. So from 408 on Q to 412.86 will be the next resistance. Now IWM, yes, you're right, completely different story. It has filled the gap here, and now it's consolidating, wallowing. Here's a pennant that will signal a move from here once it's finished consolidating. I have support 193.40. Generally, as a rule of thumb, a consolidation will continue in the same direction. We have negative on the MACD still, and RSI's leaning lower. I have support down here at 188 on IWM. Not to say the rest of the market won't drag it up, though, to 198.80. So IWM, keep an eye on it. It could bust out to the upside or the downside here. Usually it's in the same direction. That's what I see in IWM.
It's setting up for a move, likely lower, but it could be higher. I got to tell you, the IWM definitely fooled me. Folks, I know this happens to everybody, but it happens to people like myself and Leisha too, where we latch onto a theme, feel like we've got it, like the Russell 2000 finally had some momentum, and then it just kind of pulled the rug out. I was looking for the Russell to make a run at 210, and instead now I'm looking at it. Is it going to make a run below 190? And it may very well do so. Really, really fascinating stuff. So we've got the bonds, we've got stocks, and Leisha, I'm going to ask you to get your Bitcoin charting ready. But
I was just doing that.
Yeah, let's bring in our good friend Andrew Giovinazzi, and let's hit on some major headlines.
How you guys
And
doing?
I'm
Hey,
good.
Andrew.
All
Good.
right, and let's start with we're gonna hit on bank earnings, Bitcoin, and then I want to talk about the international incident that happened last night and whether it has an effect on markets. But
Okay.
let's start with Bitcoin because a lot of people are surprised by the price action we saw in names like MicroStrategy or Coinbase or the Bitcoin ETFs themselves.
Right.
So, Andrew, what was your take on the price action and how Bitcoin behaved on the first day that Bitcoin ETFs, Bitcoin ETFs, were allowed to list? What was your take on the behavior?
You mean like 2 years ago or a day ago or 2 days ago?
I mean, yesterday.
Um,
When the cash
Generally, it's
ETF,
kind of like
or
sort of sell the news type of thing.
yeah,
Buy the rally, sell the news, and then
By the rumor, sell the news.
yeah, buy the rumor, sell the news. I figured I'd get it squared away sooner or later. And like the last time, all I would say is the last time when they listed the future, that was a short-term high because all of a sudden there's more liquidity now. I mean, part of the whole thing for Bitcoin is the fact there's only so many Bitcoins. So I feel like the more liquidity there is in the short term, it will be a short-term top, and then whatever drives the mania after that, people will probably want it again. I have noticed that as the interest rate rises or over, basically, there has been more demand for Bitcoin again. So it's one of those things where I think people are, for better or worse, looking at it as an alternative. So it feels still like it wants to go up, even though short term here, I think after all these ETFs are released,
yeah. Well,
you'll see it going lower in the short term.
what happened yesterday is a market structure issue. I actually, all my buddies here in Austin that are Bitcoin people were all texting me yesterday. They're like, "Oh, the ETF listed, rocket ship, all the emojis and things like that." And from a market structure perspective, like let's take BlackRock, who plans on listing an ETF, or Wisdom Tree, or ARK, or Franklin Templeton. Any of these Bitcoin firms. Here's a question for you folks. If they're launching the Bitcoin ETF, are they buying Bitcoin as the ETF, as people are buying the ETF, or have they pre-bought billions and billions of dollars worth of Bitcoin that they are then selling to people at the top of the market?
The newbies, right?
Right.
Let me see.
So what you saw yesterday was a lesson in market structure. Bitcoin, the rally was actually likely caused by these firms well ahead of time, knowing that they were going to get approved and buying Bitcoins so that they have them in the cash market. Now, I've got to review a lot of the individual filings on these, but like GLD, my guess is a lot of these also don't necessarily have to own the physical. They can also, if the physical meaning actual Bitcoin
Coins.
they can probably execute a long position via futures, and they can almost certainly execute a long position via swaps contracts, where they would have the right to buy versus something else. So there is a likely scenario where these firms, one, have some physical, but also didn't need to buy as much as they claim as the market cap, and were then able to sell. So, Leisha, off of this huge news, obviously people want to know what's going on in the chart. Bitcoin is, I had somebody try and say Bitcoin isn't a good technical asset. I would argue it's the exact opposite of that.
It's one of the best. It trades 24/7. No, you don't really get gaps, right? Because it's constantly trading. These candles right here in the last 3 days before today are called high wave candles, and I will zoom in on them. That means that the real body, which is the colored part, which is the difference between the opening and the closing, are very near the same price. But intraday, especially this one, intraday, you have, this is the daily chart, you have a huge range of the high and the low. That creates these very long upper and lower shadow lines. And this turns out to be a high wave candle. And that candle, according to Japanese strategy, means mass confusion. Mass confusion. So if you're in a trend and you see this high wave candle, look out, because it could continue higher, but it could roll over and go lower, which we are seeing today. I am seeing support in Bitcoin right around 45,000. 45,000, 45,000, 44,850 should hold. Maybe not though. Below there we have 43, like 43.5. But yeah, definitely high wave mass confusion here with the false rumor. How about that?
Mhm.
How crazy
I
was
know.
that? The false rumor and then the actual announcement. Mass confusion. Which takes me to coin real quick. Coin, Mara, Riot, massive reversals yesterday.
Yeah.
Just look there, stopped right at my median line. Massive reversal. I believe coin will trade down to 135.40. I bet puts are super high in there though, but if you are prone to looking lower, I'd say coin's heading to 135.
Now you're making me look at them, Leisha.
All those stocks have massive reversals yesterday.
Yeah.
Look at Riot.
Oh my gosh. Yeah.
You would be correct, Leisha. Vol in there is in the mid 80s.
Yeah.
The 135
Well,
that's $11 for February.
right. Because of these candles. I mean,
Yep.
the market
Mhm.
makers have to obviously protect themselves. They're going to jack up the implied vol because they don't want to sell these options when you have such a erratic day. Everyone's buying, everyone's selling, right?
Yep.
They have to raise that implied vol.
The straddle is $31 in February
In coin.
in coin.
Yeah.
And look at the volume. Here's Mara. Look at
Crazy.
the volume. Now I have support here. It's funny how Mara traded down here and then closed right at my support level. But Mara looks like it could trade down here 17 3/4.
I mean, you would argue that there is a really, really strong case to sell these names because, now I can buy the Bitcoin ETF instead of owning Coinbase, right? Or Amara or a Riot, right? Those were your best ways to
Right.
invest in Bitcoin prior to yesterday. So the bear case, especially on Mara and Riot, is pretty negative. And I would say Coinbase in particular. This is, for all the Coinbase bulls, I think these ETFs are terrible news for Coinbase.
Well, now they have all these extra alternatives, 11 of
Right.
them, right?
I mean, well, how about this? I can buy Bitcoin, be SIPC protected with a
An ETF.
firm that is not like some dog and pony show invented 2 years ago. Instead, I can just buy an ETF that's listed. That to me, to your average, to the majority of investors is going to be attractive, right? What we've done is centralized a decentralized coin.
Yeah.
And,
yeah.
So if you want to stay decentralized, then yeah, maybe you go on Coinbase or something like that. But for most people that are sitting in front of a Fidelity account with, $65,000 on it that want to have some Bitcoin allocation, this is a great method for them to do so without having to open up an account and worry about, being hacked or having their coin stolen or things like that. So I would argue that this news is maybe the most bearish thing that could happen to a firm like Coinbase. I don't know, Andrew. Leisha, what are your thoughts on that?
Yeah, I agree. Like, why would you trade coins when, all you see on the internet is the terrible fills and prices people get when you can just go straight to the ETF?
Yeah.
I mean, ultimately, that's what, look what how many asset managers just go to the ETF, SPY, IWM, all the ETFs for managing people's money. Why wouldn't the flow go to the ETF in the same way? I mean, history is pretty clear when it decides to move that way. I also
100%.
noticed, just on a side thing, Skew and Riot Mara and Coin, the collars, you can get the collars for nice credits, like buy a 16 or 17 put and sell 30 call. I know
All
that's a
right.
non
Skew, for
sequitur.
those that don't know, is the relationship between an out of the money put relative to an out of the money call. So options are trade off of something called implied volatility. That is the implied volatility is the stock price of an option, if you will. And skew is how an out of the money put, implied volatility, how an out of the money put stock price is relative to an out of the money call. So when Andrew says that there's a pretty positive skew, normally most people want to hedge. So they buy puts and they'll finance the put by selling a call. So normally you expect an out of the money put to be more expensive than an out of the money call. When things are really screwy and out of whack, typically when a stock is peaking, you'll see skew get inverted and calls will get more expensive than puts. And you're able to put on what's called a collar, which is long stock, long protected put, short covered call for a credit. When you can do a collar for credit, that is one, typically a sign of the stock getting a little overheated, and two, definitely a sign that markets are dislocated.
That was very nice.
I also, may I add to that?
Yeah.
Being a directional trader, because I'm reading the charts, I'm taking an educated guess on the direction of a stock. I look at skew because I like to do those vertical trades,
Well, yeah.
right? I like to do those call and put vertical spreads. I look at skew as the at the money versus the out of the money collar put.
Yeah.
And if
Yeah.
I can get skew that way, where I'm buying the at the money for a lower implied vol and selling that out of the money, the skews going higher, they're more expensive implied vol wise. That to me is, another way to look at skew, I guess.
Yeah, no, that is 100% one way. I mean, when I was trading S&Ps, we didn't just compare out of the money calls and puts. We looked at the vols for these curve to plot everything, and
Right.
the at the money value is the peg for everything.
Exactly.
At the money implied volatility, that at the money stock price of the option is really what sets the
The rest of the options chain.
sets the price of the options, and then just supply and demand issues will move the wings around.
Absolutely.
Also,
All
I
right.
would warn, like, the collar, just beware. Like, it requires margin, risky,
Yeah.
danger. Will Robinson, beware,
Well,
whatever.
but you can actually buy an in the money call and sell the out of the money call and recreate the collar for a little bit in a similar fashion.
Oh yeah,
Um,
lots of creative ways to play it. I
there's a
just,
lot of fun ways. This is why
warning
we love
people.
what we do at Option Pit, because what we do and we really specialize is coming up with creative ways in the options to express our opinions. And it gives us an edge. Speaking of edge, the banks are out, and
Oh yeah.
they're so far the edge was selling straddles. Going in earnings, they were the cheapest they'd been. The straddle is the cost of the call and the put. It's basically the at the money call and the put is basically the market's best guess at how much a stock is going to move between now and that option's expiration. So the fact that today is Friday, we have options expiring on Friday. We had a pretty good look at what the market was guessing. Names like JP Morgan were going to move. So going into today, they had priced the JP Morgan closed yesterday at 170, 170.30. They had priced the at the money straddle, so the call plus the put, at approximately $4 and call it $4.65, $4.70. We're up $3.40. So we're only up. We are not moving as much as they're projecting. But JP Morgan, they had a big charge from a mid-cap bank takeover. But excluding that charge, JP Morgan had some great earnings. Another winner in the earnings bonanza, not Wells Fargo, was Citigroup. Citigroup announced this morning they're up $1. Again, similar situation. They were pricing in only a slightly over $2 move. And currently it's up $1. Fargo has reported the earnings this morning. They didn't love those. Shocker. Wells Fargo disappoints. And again, an underperformance. It's down 89 cents. They're pricing at about $1.50. And then our last earnings was Bank of America. You'll hear traders call it bank, just as an FYI. So if you hear me or Alicia or Andrew say, bank earnings are out, it could be JP Morgan, or we could just be talking about Bank of America. Bank was pricing in about a call it about a 90-cent move, $1.10, and again less than expected. So far, earnings are not causing any major fireworks, and that's an important thing. Banks not causing fireworks, probably bullish for the day. That would be my take, especially if JP Morgan is up. Guys, what's your take on these bank earnings to start the day?
I agree. JP's up $3.
Yeah.
Yeah. They all had hammers yesterday. Bank, Citi, and JP Morgan all had hammers yesterday, which signal a change in downtrend to an uptrend.
Oh,
and
yeah.
they're all, well, Citi's up and JP Morgan's up, but Bank's down, but I believe.
Bank's down and Fargo are down. I know you'll never believe it, but Fargo did not execute.
Gee, what a surprise.
I know. Fargo, it's funny, like 10 years ago, Fargo was considered the best run bank out of that whole group, right?
Yep.
Maybe 15. And how the tables have turned.
Yeah, hasn't gone
Now
well.
It is hands down the most poorly run bank out of that group. Citigroup is like, hey, how dare you steal my mantle as worst run bank?
You also, with the bank earnings out, and it seems like they're okay, not great, but okay. Is it potentially a bit of a vol killer? Can we see an 11 handle today into the 3-day weekend?
Ooh, I don't know if we're going to see an 11. Well,
low for. Can we see a new low in VIX? That's my big questions.
Like 11.99. Does that count?
Close enough.
Let's see what VIX futures are doing. They are. I mean, that's interesting. VIX futures are up.
Wait a second. Is Apple up $11? No, never mind.
No, it is not.
I'm looking at something.
That's interesting. So now the last thing I wanted to hit on is oil prices, because oil is getting a pop today. The U.S. bombed. The U.S. and the United Kingdom bombed the Houthis in Yemen. That is my guess is that the Yemeni government probably gave the green light for this. In fact, I can't imagine they wouldn't. But that is causing a pretty big stir in oil. USO is up $1.57. So a pretty strong move out of oil pre-market. You're seeing some strength in Exxon, CVX,
DVN.
Shell. All of the oil names are up pretty big this morning. So that is for macro wise for the whole market, I don't think that this is significant, but in terms of the individual oil names, it's a pretty big deal.
Which
All right.
would you like to talk about your stock right now with?
Sure.
Connected
Yes.
to that?
We're running a little behind, so let's dig in. So over the last couple of weeks, I've laid out a couple of different ideas. I'm still waiting for Truist Financial to work out, but it's nice hammer there, Alicia. It is starting to I think is getting ready to break out. I still like TFC. CCJ, I would say my timing was pretty good on saying it was time to buy CCJ. Folks, if you weren't with us last week, today is the 12th. We last met on the 5th. This is CCJ was trading 42. It had the morning of. It opened at 42.63. It's up approximately 10% and rallying another $3 this morning.
Wow.
So, I'm not gonna sit here and pat myself on the back, but I will say that we were pretty darn right on that one. Because you loved it too, Alicia. You'll recall you said,
Yeah,
Mark, I think
have,
that's a great play.
Yes, it follows the pitchfork very well, and bounced off the support level. I had extra support down there. Yeah.
All right.
Another thing I can add is Frank, our political commentator at Option Pit. We're long some CCJ calls in one of the products. So
nice.
Today he was looking for those federal dollars moving to uranium producers. So apparently it's causing a bit of a stir in all the uranium stocks. So
yeah,
if they throw federal money at it, they could go flying.
Yes. Well, I was gonna give out a bull oxy trade, but last night kind of threw a wrench in my trade idea. So I'm gonna bow out on my trade idea for this week. And Leisha, what are you looking at?
I'm watching Roku.
Ooh.
Roku is sitting on support here. It's testing it again as we speak. If Roku trades below 86 today, I would like to hop into some puts in there. I think it could trade down to 80.30, which would be a nice ride in there. So watch for Roku to trade below 86 and possibly some puts next week or the 26th.
Folks, if you can you please tweet at me what the use case is for a Roku? Because I can't figure it out with everything already built into the TVs. I know some people don't have a smart TV, but if there's a use case 10 years from now for a Roku, please let me know what that is, because I don't get it.
I honestly don't even know what it is right now, so I just look at the stock chart.
Well, Alicia will not be tweeting a use case. And that brings us to the best, coolest ride in town. The sweet luxury automobile that is Andrew's trading vehicle. Andrew, take us through what you're looking at for this week in Andrew's trading vehicle.
All right, you guys, Ruben, if you want, you could share my screen. So the first thing I want to do is let's go take a look at Boeing, because they're kind of let's just call it a poster child for things not going totally well here. Let me just separate this out. There we go. All right. So Boeing was here, everything was hunky-dory, and then the train, whatever, the door blew out on the plane, and sadness ensued in the stock. That took it down around, $20 or $40. Now, does not appear to be as big a problem as the software was. So historically, Boeing has bounced back from this. Now, clearly, COVID was a mess, still hasn't really recovered as a company totally yet, but a long way. But I look for Boeing to bounce eventually. So when I'm trying to set up a trade like this, and I think it's going to move higher, in the future, one thing you do is just buy the stock and forget about it and wait. That's door number one. If you want to spend less money, because 100 shares is $21,000, so maybe you don't have that laying around, even buying 50 shares, 10 shares, whatever. So door number two is, okay, I want to get long. What are the ways to get long? And I believe here, my general, whoops, did I lose my thing? Oh, nope, there it is. So my general way here is call versus a call butterfly. You could also buy call calendars, call vertical spreads. There's lots of ways to get long the underlying, but I don't necessarily want to spend the $22,000 to get long Boeing. I'm not buying it this morning, mostly because the stock has not stopped going down. So the first thing is, for me, wait for the stock to stop going down. The second thing is, all right, let's see it start to, move back up again. So at least for right now, it's still looking kind of weak. So, but eventually I think that's going to change. Now, what is the decision making between a call and a call butterfly? The first thing is, if you don't know what a call butterfly is, it's buying one strike somewhat near the money, selling two strikes out of the money, and then buying one more strike farther out of the money. In general, you want the strikes to be equidistant. Now, you could change the strikes, but those are different types of butterflies. You could have broken wing butterflies, unbalanced butterflies, ratio butterflies. I mean, the list goes on and on and on. But for this, I'm going to look at what I would call a vanilla butterfly. And the reason why is generally the duration of these recovery plays take a little longer than you think, right? So like the market hates it and you think the stock's going to go right back up again. So in general, when you think something's going to move fast, I just buy a call. If I'm going to hold it for a relatively short amount of time or a very long amount of time, like, 6 to 8 months, in both of those cases, decay is not much of a factor. So if you buy a call and you're only going to hold it for a day or two because you think the move is going to happen, the option really doesn't have a lot of time to decay. If you're buying an option for 6 to 8 months, when you're buying that much duration, the decay profile, how much the option rots per day, is very low. So the idea is the decay part helps you decide how you're going to place the duration of the trade you want to hold. So if I buy a call butterfly, I kind of take most, if not all, of the decay out of the trade. It doesn't mean it's not going to decay eventually. It's just not decaying right now. So I kind of, hopefully you can see this. So I sort of blew up the profile here of what a long butterfly would be. So if I buy the March 230s, sell the 245s, and buy the 260s, that's a 15-point butterfly. Buy one, sell two, buy one. The cost is around, I believe it was like $2.65, something like that. So my one lot, which is $265 essentially, would give me relatively the same performance, not exactly, but could potentially pay me $1,300 if we get back to that 245 number by the middle of March. So that would be $260 paying me, if you close right at the strike at 245, you'd make around, let's call it $1,200, right? Everything being perfect. So that's performance wise. If I'm buying this, 100 shares of stock and I get to 245, I'm going to make $2,000, which would be about 10%. But, your return on your fly by only using it, a very the short answer is very efficient use of your money if you're looking for a bounce. The second part is what does the risk profile actually look like? So when at Option Pit, when I'm talking with Mark, Leisha, and with our students, is what we call is like, what's your gamma profile? I'm sorry, what's your Greek profile? How are the Greeks performing? So delta is just how long you are. Gamma is how much your delta is going to change. Theta is how much your option is decaying per day. So a positive number means here you're getting paid, and a negative number means money would be going out theoretically. And your Vega number is how long or short implied volatility you are. That's a rough definition, but that's basically it. And here I'm short a little bit of Vega, about 3 Vegas with where the trade is set up. We're trading around 222 when I took this snap. It's probably trading $3 lower today. So this fly is going to even be cheaper. So the thing is I can have a long delta. I could participate in a rally like a call, but my theta profile, and this I believe is out to January 26th. So if I'm holding the trade between now and the 26th, and we rally slowly, so this is rallying here 222, 224 up to 228, my theta actually gets more positive, which means so my butterfly is basically saying, hey, we can rally, but you're not incurring the theta penalty. And this is going to take a lot longer for your trade to mature and pay you. That's the downside. So you need to have a relatively long time frame for your trade to work out. And that's essentially the difference between a fly and a call. Call, immediate gratification. Butterflies, when you buy them 2 to 3 months out, is much more delayed gratification. And then lastly here is just, your Greek breakdown is just like this. So it's giving you an idea. You're long basically 6 shares with a little short gamma, positive theta, and a little short volatility. So the whole idea is if nothing really happens much, the value of the trade is not going to change a lot. I don't expect Boeing to really tank from here. It could. But I think a fly is a better way to play this upside move than just a straight call because the timing is a little bit uncertain. So that is my vehicle for today. And next week, I will have my broken arm trade closed, and I will go through the semi-disaster that it has been. It hasn't been great, but they all can't work, as we all know.
All right. Well, we've got about 2 minutes left in the show. And let's update where markets are and give our final thoughts for the day. SPY is now positive on the day. It's recovered from those bank earnings. The Qs, they're slightly down. IWM, that's having a day. It's up. It's leading the market up 0.75 point right now. 0.75% right now. MDY, the mid cap, looking like it's going to open up pretty nicely. And the volatility index is leaning lower. Andrew, where do you think markets go today?
I think we rally. The PPI was okay. Like Lisa said yesterday, the bond market liked the auction. So we're gonna move up a little bit. How far? We're 20 handles away from SPX 4800. It's a little too juicy to pass up. So I say we're around that number by the end of the day, going into the 3-day weekend.
All right, Leisha, what do you got?
I say watch the bonds, and if we take out yesterday's high, 479 on SPY.
Woo!
I'm with you.
like
I think the SPX is going to break. I think SPX might break 4,800 today, and which would be about 20 points higher on the day. The one area I think Bitcoin is going to continue to be bearish for the next few days, but it will create a buying opportunity sometime middle next week. But I would be bullish on the day and bearish volatility. I think we're going to have a pretty nice day here when all is said and done, and we're going to have a nice long weekend. So with that, Andrew, thanks for joining us.
You're welcome.
So my for pleasure. Andrew, the Oracle of Options, and Leisha, the Duchess of Doge, the Queen of the Candles, I am Mark Sebastian, your only option. And this was OptionPit Live. We'll see you next Friday.